DeFi, Tesla, Ethereum, Spotify, Netflix, Robinhood, Coinbase, Snap, Tron.
Good morning folks, James here from TradingView. Welcome back to our Snaps Roundup, the weekly show where we cover what's green, what's mean, and what remains to be seen in the land of stocks and crypto. Apparently, decentralized finance means re-incentivized crime right now. A recent report having highlighted that a staggering $1.3 billion has been swiped in Q1 2022 alone. 97% of all stolen crypto came from DeFi platforms. The Chainalysis report identifies private key hacks as being behind the majority of breaches. This includes the recent March 2022 Ronin hack, which saw over $625 million in crypto pinched in just a single attack. 2 years ago, DeFi platforms represented just 30% of all hacks, which shot up to 72% in 2021. Exploits of pricing oracles and faulty code may be prime vulnerabilities, but 35% of all the cryptocurrency stolen since 2020 has still been down to simple security breaches. Protect those private keys, people. We can't say it enough. The temptation looks set to continue though. An estimated $256 billion is currently locked into DeFi projects as of November 2021. This comes as Ethereum gears up to its 2.0 upgrade, with $10 billion staked on the platform that supports leading DeFi projects such as Uniswap, MakerDAO, and Aave. So let's hope that next development really goes smoothly. Please, Mr. Vitalik. Tesla's grip on the EV market wheel is looking a little bit looser. The Mercedes-Benz Vision EQXX concept car completing a supervised 1,000 kilometer, that's 620-mile journey on a single charge. The EQXX's range was tested on a single battery charge. The car recently traveled from South Germany to the French Riviera via the Swiss Alps. This insanely scenic route ran 1,000 kilometers and involved conventional traffic. And best part, when it got there, it still had 15% charge on the dial. Tesla cars won't go down without a fight though. Our Next Energy, or One, has claimed to have eked out 1,210 kilometers, that's 752 miles, from the Model S with its prototype battery installed. The EV war is certainly looking like it's heating up. Musk tweeted on April 11th about the cost of lithium, making allusions to Tesla getting into mining. Panasonic chief executive Yuki Kusuma also confirmed that his company would prioritize a 4680 battery with the hopes that manufacturers other than Tesla will eventually adopt it. The race is well and truly on. Hopefully it will remain an environmentally and surprisingly quiet one. Hackers scalp another DeFi crypto in Beanstalk, a stablecoin protocol running on the Ethereum network, stealing the princely sum of $182 million. I think we all know by now that DeFi just can't seem to weed out these attacks at the moment. This is the second hefty exploit within a month, and while it's no Axie Infinity that saw $625 million stolen, Beanstalk's stablecoin Bean did lose its dollar peg due to the attack. As of Sunday, April 17th, it was sitting at 25 cents. The Beanstalk finally met its unfriendly giant after its governance tokens Stalk were accumulated in flash loans on lending platform Aave. And with a big sack of these beans, the hackers used their mega voting power granted by the governance tokens to quickly pass a proposal that moved funds off the Beanstalk and into a private Ethereum wallet. 24,000 ETH and over 100 million Bean tokens were pinched. Get this though, the attacker appeared to donate $250,000 of the stolen crypto to a Ukrainian war relief wallet. The rest? You've guessed it, right to Tornado Swap for some dry cleaning. Spotify's time in the sun can soon see some clouds now that one of its biggest European rivals, Deezer, has plans to go public. Deezer will be taken public this July after agreeing to a blank check merger with European SPAC I2PO, which is backed by a bunch of French billionaires like Francois Pinault, who founded Gucci's owner Kering, in a deal that values the streamer a little over €1 billion. Second time's a charm? Deezer is certainly hoping so. The service actually tried to IPO in 2015, but reversed course to pursue 2 rounds of funding in the years that followed. The 180-degree turn was because investors were unconvinced at the time by the profitability of the music streaming industry after watching Pandora lose $86 million in just 1 quarter. But since then, music streaming has of course boomed, largely led by Spotify and Apple, and Deezer is now ready to make its mark. The platform is super popular in Brazil and France, But Spotify is 25 times its size and holds a 31% global market share to Deezer's 2%. Everybody loves an underdog though, so let's see how this one plays out. Now the time may finally have come to stop using your ex's Netflix account, because it looks like a password sharing crackdown is on the cards as Netflix reports its first ever subscriber decline in over a decade. Netflix shares created over 25% in extended trading on Tuesday, April 19th, after the company reported a mixed bag of earnings offering more bad news than good. The streaming beat on the bottom end with earnings per share of $3.53, but missed estimates with revenues of $7.87 billion. The brand reported a loss of 200,000 paid subscribers compared to the 2.73 million analysts had expected it to add, the first decline in 10 years. Netflix blamed increased competition, password sharing, apparently 100 million household accounts are sharing right now, and the war in Eastern Europe. If it hadn't halted Russian accounts, it apparently would have added 500,000 new subscribers. The company has to reassess its hard line on advertising if it hopes to avoid a more severe fall-off in Q2, which is already forecasted to see subscribers drop another 2 million. Netflix always said no way, Jose, to advertising on the platform, even as competitors did so. But co-CEO Reed Hastings says, unfortunately, it's now something they're going to have to look at. Robinhood has once again taken its expansion plans up a notch with an acquisition of a UK fintech startup. The brokerage has bought London-based Ziglu, which is a fintech that lets users trade a bunch of cryptos and is one of the few to have secured regulatory approval in Great Britain. Nobody said how much Robinhood paid, but the app was valued at around £85 million, that's $110 million, last November. Shares jumped 5% on the news. The goal is, of course, UK and European expansion, and this is actually the second time Robinhood has taken on the region. The app was planning to launch in the UK in 2020, but had to indefinitely postpone without giving much reason as to why. It was mid-pandemic though, so that likely played a part. COVID is over though, I believe. And so too seems to be the retail trading frenzy that hit the markets back then. Robinhood is experiencing a rapid decline in trading volumes and its shares are down 35% this year. So now seems like the right time to revisit its expansion plans, if British regulators will let them. Tesla lit up its stock with a 420 earnings report. Didn't think that date was a mistake now, did you? Leaving analyst estimates in the dust, or should we say smoke? Shares added nearly 6% in extended trading on Wednesday, April 20th to erase its intraday losses after easily topping on both ends with an impressive Q1. The EV maker reported on earnings per share of $3.22 on revenues that were up an eye-watering 81% to hit $18.76 billion, boasting 87% growth in its automotive revenues and gross margins at a record of 32.9%. Revenue growth was driven by car sales and car prices. Tesla reported earlier this month that Q1 saw record EV deliveries of 310,000, all of which brought in more cash than usual thanks to Tesla's numerous price hikes this year. It gets better too, because Musk says the brand has a good chance of achieving 60% delivery growth this year. It wasn't all giggles and munchies though. The earning beat was made all the more impressive considering severe logistical and supply disruptions, which are set to continue into the year and impact its main production factories. But investors agree, on balance, the good stuff outweighed the bad. Hotshot crypto exchange Coinbase has finally served fans the beta of its long-anticipated NFT marketplace with a bit of social media zest to spice things up and compete with OpenSea. Coinbase NFT came to the market on Wednesday, April 20th, letting a small bunch of excited fans off that 3 million long waitlist to test out the platform for the very first time. It's taking a leaf out of Zuck's book, adding an Instagram-esque feel to the platform and letting users like and comment on images and have their own NFT profile pics. Has it missed the hype train though? OpenSea NFT sales are down 67% in the last month, and that's the biggest player in the game currently. Coinbase hopes its social media angle will bring in more casual traders, but there's a way to go and competition is heavy. OpenSea currently accommodates 95% of ETH-based NFT traders. Shares traded down 2.7% despite Coinbase's rollout after hitting an all-time low of $140 on Monday, April 18th. Even as NFTs cool off, investors will be hoping that diversifying its revenue stream through this new venture will bolster some price action leading up to the official launch. Snap kicked off social media earnings seasons on a cautionary note, leaving investors looking for a filter to cover up a downbeat outlook. Shares snapped up 6% in extended trading on Thursday, April 21st, despite missing on both ends in a challenging quarter, reporting a loss per share of 2 cents versus the expected 1 cent in earnings per share on revenues that grew 38% to hit just over $1 billion. Snap's daily active users jumped up 18% year on year to beat estimates at 332 million, as rivals like Twitter and Facebook report declining users. Take that, Facebook. How is its advertising business holding up, you ask? Well, social media platforms saw declines in ad revenue thanks to Apple's new privacy rules, but Snap created a new tool that's now responsible for 90% of its direct ad revenue. But now, it'll have to contend with things like war and inflation, leading customers to lower their advertising budgets. Will Q2 end its streak though? Snap expects the current quarter to see revenue growth of up to 25% at the high end, missing estimates for 28%, although it beat estimates by forecasting daily active users of 344 million. Analysts are still bullish despite growing macroeconomic headwinds, but let's see how other social media platforms fare in their earnings report this week. And our final story of the day, Tron joins the stablecoin game with decentralized USD, that's USDD or presumably USDD. And founder Justin Sun is already bigging up his new creation quite a bit. The new USDD will spearhead the stablecoin 3.0 era, according to Sun, and in this era, USDD will not rely on any centralized help for storing or management. This begs the question, what will Tron use to back it? Given fiat is, well, by its nature centralized, the crypto network has already ruled that method out, but Bitcoin could be a shout, and that's exactly what Terra is doing at the moment. It seems Sun wants more than just a slice of the stablecoin market pie. He's made two pretty bold claims last week, first stating USDD will maintain its dollar peg regardless of market volatility, and the second arguably much larger claim that the stablecoin will become the most decentralized in human history. Well, you'd have to hope so, given it's literally in the name of the token. Tron token TRX liked the sound of the news, up over 12% on Thursday, April 21st. Terra's recent success with its stablecoin UST, now third in the stablecoin rankings, has seen explosive gains for its native token Luna. Based on that logic, investors will be hoping TRX will get similar attention if Tron's stablecoin venture pops off. Okay folks, that is all we have time for. If you enjoyed the show, please do give us a like and a subscribe using the buttons below. But until next time, whoever you are, whatever you're doing, wherever you happen to be, look first, then leap.